Investing in commercial property is considered a more daunting, higher risk option than buying a home and filling it with flatmates. For starters, you'll need more cash in your pocket for commercial. The bank's lending criteria is tougher, and once you have the loan, it's a game of patience, waiting sometimes months for anyone to move in while you pick up the rates. But with careful planning, it's easier to manage. There'll be less of those niggling maintenance calls from the tenants, and probably the most attractive part of the package is the rental yield.
Commercial renting is a lot better for the landlord. As a rate of return, a commercial landlord can expect 8 to 9% of the capital value of the building.
And Chris should know he owns a mixed-use property, operating a website building company downstairs with a very short walk home at the end of the day, upstairs.
For this property came inclusive of GST was 272, and that was about 4 years ago. Today it's worth about 400. So commercial residential properties tend to track with the residential market, which is a bit of a bonus. The reason for getting this property is it looks professional, like compared to trying to run a business from your house. That doesn't look so flash at all. My commute to work is pretty good. I just travel down the stairs. I think there's 13 stairs. Sometimes it feels like there's about 20 or so. That's about as bad as it gets.
After initially investing 4 years ago on the North Shore, he now owns 2 other commercial rentals as well. It's worked out for him now, but he learnt the hard way that choosing great tenants from the start is crucial.
My experience with the mixed-use property has not been that great. They tend to, tenant-wise, they tend to attract short-term tenants. If you get a bad tenant, it's very difficult to get rid of them or to seek any sort of compensation if they damage the place and so on. As opposed to my experience with full commercial has been a lot better. You tend to get much longer-term tenants. I've got a third property. I purchased that about 1.5 years ago, and it is a fully commercial property. It has attracted a very good quality tenant, and they're there for a longer term and pay their rent on time and a dream tenant. The only thing a landlord really wants is to be paid on time and have the building not trashed. So yeah, make sure you've got good tenants with a good job and good line of business and a bit of a history there, and make sure you've got your rules clear about defaulting and what action's going to take place.
Trials and tribulations behind him now, Chris Maffey's property choices were smart. Stephen Glusina of LJ Hooker says mixed-use property is the way to go for wannabe investors.
We're seeing more and more of a mixed-use live-work environment. Today, with email and various forms of electronic mail, you could be based at the Batch and still run a successful business. Well, commercial property is generally a better investment long-term than perhaps residential. Generally, the banking criteria is a little bit harder with commercial properties as opposed to residential. Your deposit's got to be greater, but the upside is the return is usually more stable, so you're going to get a better tenant, more long-term, the leases are longer, and the tenants look after all the outgoings. If you're thinking of buying a commercial property, go to a specialist tax consultant, because there's considerably more advantages in a commercial building as opposed to a residential.
Q Mark Withers, a tax expert specialising in property deals. He mentors clients on how to squeeze the most out of the investment without breaking the rules. He contributed to the Commercial Real Estate Investor's Guidebook and is about to release one himself on making money in a falling property market. Currently, he has 4,500 investors and mentors clients on his books.
Commercial property investment is difficult for a first-timer because it's hard to eyeball a property and really get a sense of its value. The value is derived from the rent that it can produce and the quality of the tenancy. You need to understand the financial outcomes that are going to come with the investment. You need to be confident that you can sustain the cash flow commitments that are required. You need to understand the tax outcomes. Banks also are less inclined to lend as much against commercial property as they do residential. Residentially, lending is relatively easily accessed at 70 to 80, even 90%, but in the commercial world, lending tends to be around 60 to 70%. Depreciation is a topic in itself. It's an allowance for the wear and tear on the building, and the Inland Revenue publish rates for the different assets within the commercial property that will dictate the depreciation claims.
This is how it works. Say if you purchase a $100,000 commercial site, claim 3% depreciation of the building component of the site, which equals $30,000 over 10 years, you then sell at $200,000, so your capital gain is $100,000. That's a tax-free capital gain provided you were a straight investor when you bought, not a speculator, and didn't have any intention to on-sell. The sale proves the property appreciated. You're liable to declare that earlier $30,000 as income now, be taxed at 33% and owe inland revenue $10,000. Think of it as an interest-free loan. So with a little creativity, there's money to be made, especially in developing. Buy a closed-down petrol station at cut price and turn it into a drive-through liquor store or Fruit World. Though some investors come unstuck juggling their tax and mortgage obligations, which is why most experts still recommend gaining experience in residential rentals first.
You really can't go wrong if you're starting off with residential, even if it's a small little one-bedroom unit. It's still an opportunity for you to get into the market, get some experience under your belt, and then perhaps venture out into commercial, get something that's perhaps mixed use, where you have probably got a greater capital gain down the track.
I think the main motivator for commercial investors is the increased yield. There's less emotion attached to the added value prospect, so if you can increase the rent or lengthen the lease, generally speaking, you'll push the value of your property up.